type, string, value. While the global trade community recoiled, Econ doubled down on Trump's trade agenda, seeing opportunity where others saw disaster. What's the specific, controversial element of these policies that only a Wall Street titan could love, and how will that play out for Main Street? So, Icon's view on Trump's trade policies, especially those involving tariffs, was pretty interesting. While many experts worried about things like trade wars and higher prices, Icon seemed to see chances to make smart investments. He probably looked at companies that could benefit from less overseas competition due to tariffs. For example, if there were tariffs on steel imports, American steel companies might do better, increasing their value. Econ, being an activist investor, often looks for companies that he thinks are undervalued. He might have seen Trump's policies as a way to shake things up and create value where others didn't. Think about it. If tariffs changed how companies do business, some could struggle, but others could really take off. Econ's good at figuring out which ones those might be. Also, he is all about shareholder value, and it is about making returns for investors. These rising interest rates can slow down economic growth. And then, there are worries about global events and supply chain problems, which just adds more uncertainty. Now, how might this recession impact you? If you're like David, working in automotive management, you might worry about layoffs. Companies sometimes cut jobs when the economy slows. Anya, the freelance graphic designer, might find it harder to get clients as businesses cut back on spending. Go, relying on his investments, might see his savings shrink as the stock market becomes more volatile. Maria, the restaurant owner, could struggle to keep her business afloat with rising food prices and fewer customers. And Satoshi, fresh out of college, might have a harder time finding a good job with high pay as businesses hold off on hiring. So, what can you do to protect yourself? The basic thing is to be prepared. If you have a job, try to be valuable to your company. That might mean taking on extra tasks or improving your skills. Start saving money whenever you can, even small amounts. This can slow down economic growth and potentially trigger a recession. Because of these indicators, banks can also make calculated adjustments. They can change interest rates on loans and mortgages, adjust their investment portfolios, and tighten their underwriting standards, making it harder to get a loan. So, while you might think the inverted yield curve is bad news, and it can be for the overall economy, banks that are well prepared can actually profit from it. However, many questions remain unanswered. For example, how will quantitative tightening affect the ability of consumers to borrow in the future? What specific sectors of the economy will be most affected by defaults and foreclosures? These are complex issues with many moving parts. If you want to stay informed about these important topics, please like this video, share it with your friends, and subscribe to our channel for more insightful analysis.